So I'm here today with just sharing, and my name is Ann, and I have my channel here on YouTube. It focuses on finance, wellness, as well as health wellness. And I would like to focus today on uh, what to do with your monies in the event that you get laid off or fired, or you leave the company on your terms, or whatever may happen. But what happens to your money, right? And when I speak about your money in this particular example, it would be like a workplace discussion. What happens to your 401k, or what happens to if you have a pension, right? And a lot of these companies, the private companies, may or may not have a pension or traditional pension. More of the governments, I do believe they have it. Some of the private companies may offer it and may not. But a pension is separate from a 401k. It's something that if the company has it, you would get it in addition to your 401k, as well as you would get that if the company offered it, right? So, what is a pension? Um, and who has it? If you have it, you will know it. It will be part of your benefits package. But some people have a pension and don't even know it. So you definitely want to look into what your benefits are for your employer. And I have to say that I am not a financial advisor. I am not here to provide advice. I am here to provide information and education, and say that I am here to help motivate and provide very good information. So I'm here to help that way. However, I worked in the financial industry for some years, and I worked in banking for some years. So I'm familiar with these things. But going back to what to do with your monies when you leave your employer, or whether you leave your employer willingly or unwillingly, layoff or firing, or however you leave. The best thing that you could do is leave everything where it is and speak to your servicer. And I know, again, I did a video previously on what to do with your monies when you leave your employer. And it was three things. And that's one of the things I learned from servicing 401k, defined contribution plans, and servicing pensions, that I service and helped calculate those pension calculations. So one of the things that I had to talk with the customers about was what options they have. So I was on the workplace side for the 401ks and pensions, and different customers would call in from different companies, and if we serviced their plans, then I would service the customer and let them know what options they have. Well, the same here. You would be able to, um, one, leave it where it is, which is a good rule of thumb, because you want to be able to just take a deep breath, and then speak to your servicer to see what options there are. But I would say don't do anything. Don't, move anything, pull anything out. Just leave it where it is and take a deep breath. So just leave it where it is. If it's somewhere that you feel like a great company, brokerage company that services your account, just leave it where it is. It'll be safe. It'll be safe. And then the other thing is if you leave it where it is, but when you get ready to go to a new job, you can roll it over and keep all your money in the same place. Or, um, you can roll it over to a new 401k or roll it over into an IRA if you go somewhere and then it doesn't have a 401k, or if you go somewhere and you're self-employed or something of that nature, you can roll it over into an IRA or a self-employed IRA. So they have different things that you could do. So those would be your options there, right? Right. If you have a pension, you are definitely one of the lucky ones. A lot of companies do not offer a pension. I'm taking a look at an article uh, that is coming from it's coming from Forbes, and is speaking towards pensions. And this was done a couple of years ago in 23. However, it still rang true today. This type of information doesn't change as much. It still ring true today. And it's indicating that pensions provide retirees with a lifetime of income, right? So basically, if you have a pension and your company offers that, then you're lucky if you have a pension and you have your 401k, right? A pension is a benefit that some employers provide their employees. If an employer offers a pension, then they commit to making contributions to fund payments to their employees in retirement. A defined benefit plan, a traditional pension, is what is known as a defined benefit plan. And this particular plan provides retired employees a specified benefit, defined monthly benefit that is guaranteed for life. For example, a defined benefit plan may guarantee $500 per month once an employee retires. And these are the types of pension plans that I serviced when I was working as a servicer for the workplace uh, contributions, defined contributions, and defined benefit plans. So I used to work in that department servicing 401ks and pensions for Fidelity. And I loved it. I loved it. A great place to work, a great customers, and it was just really nice helping people, you know. And if your job offers the 401k and a pension, then that's really awesome. And what I would say is if you do have a pension and you don't know what happens next, if you're laid off or if you lose your job through firing, or if you left your job willingly, I cannot speak today, willingly, then the most important thing I would say for you all to do is to speak to your servicer. They're going to be able to provide you with the guidelines, or if you just want to check up on your pension and find out what your calculations would be like in this example that I provided, what you would get monthly, then your servicer, those whoever service your account, they'll be able to provide you with calculations and things of that nature. That's what I used to do. I used to calculate pension benefits and let the customers know what they would be getting every month once they retire. Um, so you, so with that being said, if you do have a pension and you want to know more about it, then you can speak with your servicer and they'll be able to provide you that information. So, what are some advantages of having a pension? And then, what are some drawbacks to having a pension? This particular article in Forbes really does a great job and explains kind of everything. So, you guys have to check that out. As always, I always list and cite my information that I received. So, I'll cite this in this video today. So, taking a look here at the advantages of a pension, right? The advantages of the pension is that the employer takes on the risk. So the employer manages the investment fund, um, and so they do all of that. Also, they provide the guaranteed income and they're funded by the employer. So that's good. Um, Now it does say here under the funded by the employer that although some defined benefit plans allow employees to make contributions, the employer required to contribute. The employer is required to contribute money. That's what I'm trying to say. And then the drawbacks of the pension, it may be that once they calculate it based on your years of service and those types of things, that it may not be enough for you and your income when you retire. So that's a drawback. But then that's where that 401k comes in to, you will have that on top of that. So, so it says here that a drawback is that it may not provide enough income in your retirement. And then the ones that I work with, traditional pensions, they are increasingly rare. So a lot of companies, private companies, don't have pensions, and 401ks is where it is. Um, and so it's really rare. So if you have that, then that's really good. And then the payments will end once the owner of the pension, the employee, passes away. So that's a drawback. Unless you have like, they call it like a joint survivorship, and you have like a spouse who's receiving benefit. Then it says here if you have a spouse or children who depend on the pension income, losing that payment can be a significant hardship. So, um, every pension plan is different, so you definitely want to speak to your servicer and see what guidelines are and how your employer, how it falls under. But the takeaway from today, with all of the layoffs happening and um, people either leaving their jobs, getting laid off willingly or unwillingly, being fired or something of that nature, it's most important to like not do anything with your money. Just take a step back, take a deep breath, and leave it where it is and speak to someone. So you can speak to your financial advisor, you can speak to your servicer, And then once you land something else, like another role, another job, then you could decide at that time to roll it over into your new 401k or IRA or however you want to roll it over. Or you could keep it where it is. So those are my opinions only, and I'm not a financial advisor. I am knowledgeable professionally, um, and I'm here to help too. Like I said, I can't provide any financial advice, but I just know it's a lot going on with the layoffs, and I want it to be a beacon of hope, saying that you don't have to make any harsh or rash decisions, when it comes to your money for retirement. And it's always good when challenges or changes happen that you just step back, take a breath, and breathe, and make your decisions once you have all of your information. But I wanted to speak towards the pensions because some private companies still have them and some do not. Like the article said, it's really rare, but a lot of the federal employees have pensions, and I don't know how theirs work. I don't have any information on that. However, I'm sure they have guidelines and things with that as well. So I would say seek your professionals, and if you have questions about that, whoever's servicing that, you reach out to that company there. And I do want to thank you for listening, watching. Please like and subscribe to my channel. Until next time.